Wow.
Good, isn't it?
Oh, it's an intro.
Evening, everybody. Evening. Yeah, posh. We're posh around here, Ben. Oh, dying, man. Good evening. Good evening. 31 people straight off the bench, straight waiting. Good evening, everybody. Yes, the boys. Evening, evening. How are we, Drew? Joe. Evening, everybody. So we'll go around first, introduce ourselves for anybody that doesn't know who's who. So obviously I'm Jay's Finance. Everyone knows who I am because you're here. Obviously, George, if you want to go next.
Hello, everyone. I'm George, mod from the server.
And I'm Ben, and I just cover my portfolios. I don't know.
I'm John. Investments with John. It's pretty simple.
Will's dipped off and look how he is.
Yeah, I'm Will, also a mod from the server, just like Jordan.
Before we get into these, lads, we're going to show you some of the thumbnails that we're going to go with. Because obviously, as you can see, Brad's not here with us. So as you can see, Brad's under the desk.
He's like bottom left.
Oh, that's killed me. That has. Let me just post this here real quick, so that's done. I can get rid of that. Right, and then obviously you got triple bends.
These photos are horrible as well.
That's off your YouTube photo. That is. That's what it did. That was off YouTube, and then you got Mafia Will.
Oh. My eyes get further apart of every photo.
Oh. Evening, James. How are we, mates? Evening, Ed. So obviously we're going to touch on some of the stuff that we're going over this year. That photo kills me. Some of the stuff we're going over this year. It's making me edit already. Some of the stuff we're going over this year. We're going to do some giveaways. Start talking about some of that stuff. So obviously, we're going to give away 6 £50 prizes to everybody that's in the Discord as well. So before we touch on that, so we're going to touch on this. Obviously, the charity we've all been raising money for this December is Social Bite. So it's for homeless families and stuff like that for Christmas dinners. So if you do want to donate to that on the stream, the QR code is in the top right corner, which I'm going to do myself now. So Jordan just dipped off, look. So I'm going to do that real quick. So obviously what we're going to break it down to, we're going to go through people's goals and stuff while we're sorting this out. I did my video last night, but I will touch on mine. So obviously goals that I want to do this year. I want to do a lot more charity work, health, fitness. £180,000 in my portfolio is what I want to do. And oh yeah, that was work on a lot of TA and chart work and stuff like that. Something I want to do this year. George, if you want to take over, well, I'll just do a donation to this. If you want to go next.
Yeah, I mean, going into next year, I think my portfolio, I want to diversify a little bit further than it is. I'm sure there's a lot of people are very tech heavy, which I'm happy with for the moment, though maybe within the tech sector and the subsector of sort of internet, digital services, etc., ad sector, very heavy in that. So I want to diversify a little bit away from there if I can. And then sort of people-wise, server-wise, I mentioned earlier in the year in the summer, I'd love to create a one-pager. I mentioned it about Google when I was on holiday, and it was all relaxed and I had loads of time in the world. It felt like a great idea. It never ended up happening because things got busy, but something to going forward to create and have those one pages of stock I'm interested in, stock I'm following, and hopefully that'll be a good resource for people new to it, also invested in it as well.
You smashed it with Google, haven't you, as well? Because you bought when everyone was not wanting to have it. I remember.
Yeah, exactly.
What was your first buy price of Google, or what was your first when you bought your first share? What was the price up when you first bought it?
I had to quickly check. So my average came up to like 139 eventually.
Yeah, what is it now?
Evening.
310 roughly.
That's mad.
Yeah, you guys were screaming about it when it was 165 as well, like when it was in the server. A few people paid attention, but I didn't.
There was like a second dip on it. So obviously we had the April dip, but then there was a dip in May. I can't remember exactly why now, but it dipped from about 160 to 147 just in one day. And I think I sort of built my confidence then. I was like, oh damn, like Google's dropped now, it's May. I've sort of missed a bit of the April dip a little bit. and I'm going to go really heavy on Google in about 147, 148, and that really paid off. So there actually was like 2 big dips this year in Google, rather than most companies just had that sort of one main April dip.
Was it to do with or one of the reasons? Was it to do with a lot of people panicking about Google searches declining or worrying about
it might have been
especially in
that.
the April-March time?
Was it something to do with there was a law case, and didn't iPhone say that they were going to stop using it for Siri or something like that as well?
Yeah.
It was sort of just news after news after news. There was the whole AI impacting killing search, which is obviously, as I've joked many times, clearly search is really dead. But they've embraced AI, and AI has made search better. Then you had, as you say, the antitrust thing and the threats and worries about Chrome splitting off and that being like a 1 trillion roughly valuation part of Google to separate. There was loads in it. For like every time it started to recover, there was a new bit of news that beat it back down again. So it was beaten down for a long time. I'm looking here. So I first bought at about 120 because I've had this for a long time. And then just averaged up, and in April bought loads, and that was below my average, so it kept that down as well.
So people are already asking now, George, you've started something to saying, does George have a channel?
I don't, but hopefully if you're in the server, look out for a 1-pager, which I do want to get sent across and shared and pulled together maybe in January, hopefully.
Have you thought about maybe doing Substacks or something, George?
Possibly. I've got no plans at the moment for channel side of things, but creating some helpful resources and stuff, and just like I say, 1-pagers, which can be to be fair, 1 page might be hard. Maybe it'd be 2 pages, maybe it'd be 3 pages of just like the bulk information that I find useful. People can have a look over that. Maybe we'll go from there. We'll see.
What's your goals for next year, Ben? What are you looking at going into the new year? Like, what's your ambitions to reach?
When it comes to outside of finances, I do want to get fitter. I feel like I've been drinking way too much, especially because it's December, but I'm going out a lot. I just want to get fitter, go on runs, all that. But then it's a bit of a weird one, because I did a video on, obviously, I would like to move out, have my own place end of 2026. And then obviously recently, I did a video about how I had an offer accepted, because weirdly after that video, probably like a few days after, like this house popped up and it was a really good price, and I've been looking in my area for ages and it was too good not to like go for it. So I started lowballing it and putting in offers and that. But my goal really is to just try and get that sorted. And then portfolio wise, it's a bit of a weird one, because obviously I'll be moving in and it needs renovating, so that's going to be very costly. So I don't know if I'll be able to max out my ISA this time. But the thing is as well with my portfolio, I think next year might be a lot of Palantir will probably have a bit of a call off, or at least trade in somewhat sideways, or not really have any growth for a good year or two. So that's going to probably hold back a little bit of my portfolio. But I think SoFi and AMD are going to have good year. So my aim really with the portfolio is trying to get it to, it is ambitious, but I'll be really happy if it hit 250, but 220 really end of year would be great. But obviously it's hard to know, because if we go into a crash next year, then it's all
hopefully if it does happen, it happens in April again. I can buy Palantir at 79.
Yeah.
So what about you, Will? What goals are you looking at next year? What's on the bucket list for you?
I've got so many, man. I think one thing which is just like a really simple one, which isn't actually simple at all, really, is I just really want to read more. I really want to like actually read books, because I read on my phone, I read on my PC articles, I watch videos about stocks, etc. But there's something powerful and different about reading a book, or like writing with a pen rather than just like writing in your notes or something, right? So I really want to read books about investing, but also about life, I guess, as well. So that's definitely something I want to do a lot more of next year, because I haven't really done that. I think it's so valuable, because I know with your chat with Eric, and obviously because he went into like one or two of his favorite books, and that was like quite a big thing for you, wasn't it? And I think there is something so like just powerful, meaningful, like having a really good investing or really good life book and just learning a lot from it. So I want to come explore that. But then more on the investing side, same as you, Jay. I want to learn more about TA. I love the 2 live streams you did, sort of on that, and I think it was one of those things where the more I was learning, it was sort of like a massive Dunning-Kruger effect. The more I was learning, it was like, holy shit, I know nothing about this, because I thought I knew a little bit, but the more I was picking up, I was like, wow, like I actually know nothing. I'm like a complete noob on this. So I really want to learn more about that for sure.
Whose dogs is that someone's dog?
Are you nervous, Will?
Is that me? No, I don't think it's me. Is that a sound?
Oh yeah, no, it might have been rubbing the mic or something. I thought it was one of the other lads.
Okay. I want to get better at just some of the basics as well. I think because of my stock picks have been fairly safe, fairly good companies, fairly popular, well-known, easy to research companies, it means that I haven't necessarily needed to do a true deep dive, tens of hours going into, I don't know, translating articles or finding weird news from 6 years ago about the CFO or something. Like I really want to do a proper deep dive because I've kind of been taking it easy this year a little bit, just a little bit on some of my stock picks. So I want to be a bit more independent in that sense and not necessarily just rely on those like big names, which are sort of more like kind of like more obvious picks as opposed to finding a new thing out there, So I guess that kind of leans into also just my final one is truly knowing what I own. If someone asked me, could I do a half an hour pitch on one of my stocks, I could probably do about 20 minutes, 15 minutes, but could I truly tell everything about that company in half an hour about my own picks? I'm not sure I could. So I also want to research a lot more about my own stocks as well.
That's fair enough. Trying my hardest not to laugh there. Some of these boys are so. You got Alessio saying Jordan's kind of fire. Scott saying Jordan is peng. Mr. Bean is fine as. Killing me, that was. So, John, where are you at for your goals next year? Where is it? Where are you looking at? And your
mine's along some of the similar lines of some of yous. So I've probably got a smaller portfolio size. So my portfolio goal for next year is to hit 5k. I'm about 20 quid off 1,000, so gonna have to 4x my portfolio, but hopefully I'm gonna be able to put more deposits in next year. I'm in a similar position to Ben. I want to buy a house, hoping to move out next year and finally be a homeowner. Kind of scary, but it is what it is. I'm looking to hit 2.5k on YouTube, so that's doubling from now. So I'm going to work on that, grind on that, try and up my content really. I've committed for a full year of running already, so I've bought like annual plans up front. I just want to run next year. I really enjoyed it when I did it 2 years ago, so I want to pick that up. I'm currently the heaviest I've ever been and the fattest in the family, so I am Santa Claus when it comes around next week because I am the fat man. And then I want to learn options and trading as well, trade action. But I think that'll be back end of the year because I'm also going to start my level 5 qualification. That links to my work. So that'll also start consuming a bit of time.
I think most of us have got the same thing there. Well, a few of us have got the same thing where health is a thing. But I think, like you say, when you spend so much time behind your computer, and I know you, Ben, as well, do photography, so I could imagine you spend a lot of time editing as well. So when you sit
shocking, like, when you look at the step count, you're like, oh my God.
When I went from, like I say, my last job, I was doing 20,000, 30,000 steps a day, and now I do probably 1,000 if I'm lucky, and that's the toilet and back. So yeah, it's definitely something that we're working on. Next thing we'll touch on quickly because we've got a few of these and we'll some giveaways. What sectors everyone thinks going to be the one to watch next year? So this year we've had AI, we've had data centers, we've had drone stocks. I think next year, personally for myself, I think it's going to be space stocks. I think there's going to be the biggest, and drones. I think obviously you're still going to have your players and your AI and your data center. That's still going to grow out. But me personally, I think obviously SpaceX does their IPO next year, which is obviously being rumored. People like ASTS, people like Rocket Lab, I think all these stocks are going to have big years next year. What do you think, George?
It's hard to pick the three for me. For me, it's between. So on the AI side, I see it as it's AI deployment now, and it's AI infrastructure side. So anyone related to that, I think, can do well. I think rare earths could have a great year, depending on. I think there's a lot of political pressures and macro stuff that will affect how good of a year rare earth related stocks will have. I think energy is also there, and it's brewing, and it's something that the demand is going up and up and up, as it will continue to do so as AI keeps getting deployed at the rate that we're seeing. The price is going to go up, and so there's going to be more and more of a market. The market's going to grow for energy, and people that can provide clean energy. Again, political pressures factor into that, and outside of everything that we're looking at in the fundamentals, there are these political things, and I think they play in massively to both rare earths and to energy. So if I had to hedge my bets, actually I can't between some of them. I don't think I can pick one, to be fair, but those are the ones that I'm most bullish on for sure.
No, that's fair enough. Ben, where's your head at with it? What sectors do you think is going to fly the most next year?
I think robotics, probably, from what I'm hearing. Obviously, like Elon Musk seems to be getting closer and closer with the robots, but obviously he does say about, like, what I find interesting is he's struggling with like creating, like mimicking the human hand, because he said how he was surprised how like complicated it is to like kind of recreate that. But it looks like they're getting really close with the robots. Even the other companies, it's insane how much they've advanced. But I think robotics is probably one, maybe the back end of 2026, more so 2027. But yeah, robotics. And then obviously could be wrong, but I think healthcare could possibly, because a lot of healthcare is quite discounted at the moment. There's the valuations are very cheap. So healthcare could be one in 2026. So they're like the ones I'm thinking could be good in 2026.
I mean, I don't invest much into healthcare and stuff. I try and stay away from it, but there's something with like the subsidies at the minute, isn't it? Or something, whether it renews or something. Is that right?
Yeah, and that's end of this month that we might get a confirmation with it. But yeah, I mean, healthcare has been hit like bad. So I think,
and if those don't get renewed, what does that do for the likes of like Oscar and people like that? Because I'm not in those stocks. I just see people.
Yeah, well, this is the thing that I've mentioned a few times in the videos with like Oscar, when they're doing the guidance and they're saying about the guidance, the CEO is going off the fact that the subsidies won't be extended. So he's going off worst case scenario, and he's still predicting and given that they're going to be profitable in 2026, which is great. So when Oscar becomes profitable again, that'd be great. And then also in 2027, like I've mentioned before, the fact that 14 billion in revenue, 5% margins, EPS will be $2.25. And this is the fact that he's going off the fact that this is worst case, subsidies won't be getting extended. So the fact that if they do get extended, then Oscar could skyrocket quite quickly in a short period of time. But I mean, if they don't, then they don't. It's just if it does get extended, then obviously that would be a lot more money coming their way for Oscar. But yeah, we'll have to see. I'm not. It's hard to know because no one knows if it's going to happen or not. But one thing I've realized in the stock market is if there's an uncertainty, any type of uncertainty, stocks just get absolutely hit like a ton of bricks. And then as soon as like that, whatever, even if it's bad or good and it's now set in stone, it's almost like the stock even recovers well, or just it's just like the settlement at the moment is just really bad when it comes to healthcare. So once we even if it does, in my opinion, I could be wrong here, but even if they say it's not going to get extended, the subsidies, then I still weirdly think Oscar will kind of do quite well off that news as well. I just think we'll start seeing a bit of a rise with Oscar, especially in the next few quarters anyway, when it shows that they're going back to profitability. So, yeah.
What's yours, Will? Where do you think the best sectors is? I know I've just seen you put something in the chat line, but yeah, if you want to go say what you guys going to say.
Well, actually, I was going to say just one quick thing first, based on what Ben was saying. I think the last time I checked, the chance of a government shutdown in Jan is something like 35-40%. So, I mean, that is a whole factor to kind of take into account for next year early on, I think, as well. Because I think that will hit most sectors. I think when the last government shutdown hit, we kind of all thought, well, it won't be too bad. It'll be, 2, 3, 4 weeks. It wasn't that bad before. But then things did get bad towards the end. And then we had that Friday night, the massive crypto crash, the Trump tweet about China. So that kind of compounded it. But I think another government shutdown kind of back to back is going to hit the whole market and all sectors quite hard early on. I'm not saying it'll happen, but I just don't think you can count on Trump to kind of come to a reasonable kind of like path forward. I think perhaps there's, who knows. So in terms of my sectors and not really thinking about that per se, just in in a more general way, I still love fintech. I think fintech's going to do really well. I think you guys have seen how much I've been posting about SoFi, about Hood. So I'm really bullish fintech. I think SoFi can have another massive year. I think Hood's expensive, but it's clearly one of the best in the sector, and it's getting a lot more assets under management. People are moving there. Like, I think the average account size. So you know that 3-4 weeks ago there was the Tesla vote about the Musk shares, and because of that, I think a lot of people moved their Tesla shares to Hood because there's a 2% match. The average size of the account who moved was $500,000. So it just shows like how many people are pouring money into Hood. However, it's expensive. It could have a sideways year, but that doesn't mean that I won't buy some if it draws down, because it's quite a volatile stock. So yeah, I think I do really like fintech. I do really like. Sorry, Ben.
I was just going to say, like, what's your thoughts with the prediction markets coming their way? Because I think that's going to be huge.
Yeah, mate, it's massive. It's gigantic, and it's not the biggest source of revenue, but I think it's a really nice steady source of revenue. It's still going to be.
Oh,
I think we've lost him.
Are you there, Will? We'll come back to him in a minute. Oh, hold on. What's he doing? Yeah, go on then, John. Oh, is he back? I can see his mic doing something. Yeah, jump onto yours, John. So what do you think on your sectors, mate? What's the...
I think first one I'm going to look at is cybersecurity. I think a lot of people might have already looked at this, but there's still quite a few growth players in that sector. And I think the question now is, it's not a matter of if, it's a matter of when a company is cyber attacked. And there's been quite a lot of big hacks this year. So a lot of companies internally will be reviewing, and I say this firsthand, their cybersecurity protocols, the partners, who they're using, what software they're using. So I think cybersecurity could be a good one. I'm also going to look into payment sectors as well. I know a few of the lads already look into that with the likes of PayPal, but I think that sector is always going to remain consistent. I think with the way tech's evolving, there's going to be a few good growth players in that market as well. And then another one I've got my eye on is entertainment. Maybe this is because of the Netflix Warner Bros. Deal, but I'm keeping my eye on them. So they're the top three. in terms of robotics, I think that's a very interesting one. And obviously, I've done my research into rich tech, and because of that, I looked into a lot of the competitors. I do think it has quite a lot of potential. I think that's further down the line. I think robotics as a service is where the money is in that sector, and that's not fully utilized or expanded yet. I mean, it's got amazing potential. So I just need to see more customers on board to them sort of models. I remember when I walked around Morrison's a few months ago, there was just a robot going around cleaning the floors, and it was mental seeing that.
Wow.
And I had like a reaction of like, what on earth is going on? And then robotics as a service is the way they're going to make consistent revenue. But we need to see other companies adapt that. So it'll be interesting to see where that goes.
Yeah, so Alessio's just put here as well. OBG meetup ideas. Yeah, Will's just joined back. Obviously next year we're already talking about it. Probably going to get everyone together, do some paintballing, go for some food or something. So see how John rolls around in the forest. Since he's up from Newcastle, there's no trees up there.
Oh mate, what do you mean?
So, yeah, we'll probably do something like that. Will, do you want to check see if your mic's working again now, mate? Or
Yeah, is it working again?
yeah, it is now. Yeah, I don't know where you got up to if you remember.
Prediction markets, I think.
Yeah, prediction markets. Yeah, I think basically I'm really bullish for them, but there's a lot of competition. I think a lot of companies are starting to, because they're pretty easy to do. I think DraftKings are now doing it. So I think we kind of thought, well, our traditional sports betting is dead, but now like one of the biggest names in that market in the US is going to prediction markets too. So I mean, I think that'd be great for Hood. So yeah, I think it's a great play. It's just very volatile. If the S&P drops 15, 20%, Hood's dropping 50, 60, 70%, I think.
Yeah.
So it's a very volatile name. But
To be fair, oh sorry, I was just going to say with Hood, like when you said that with the drop, if Hood does drop like that, Hood is one of my top names that I would love to just load up on if that ever did happen. Because at the moment it's just so hard to get into them because they're just expensive, but they've always been trading quite expensive.
It's a definite buy, man. Yeah. Yeah, I think I don't want it to drop. I mean, I'm happy for it to consolidate and then slowly maybe go up towards 200 over the next year or two. But if it does, if there's a broad market correction, Hood's going to get absolutely whacked, and that's probably the top thing I'd buy, to be honest. It's probably one of my most conviction plays while not having enough of the stock myself. So yeah, I think it's a great stock. I was also looking into REITs as well, and I wouldn't normally be someone who would look into REITs, but there's just something I came across a couple of weeks ago, and it really kind of got me thinking about it. So REITs, I think, can do well because the Fed rate's coming down, so people are going to want somewhere fairly safe to put their money with a nice yield. But also, REITs have performed the best when there's been a Goldilocks market. And a Goldilocks market is when the inflation level and the GDP growth is about the same. So they're both around 2.5.
Will, you've just dipped out again. It's like Scott said. He's got that. Scott said this. He said he's got that Wi-Fi struggles with across the mansion sometimes. I'm not sure what he's done there. So he's muted. Unmuted. Oh, I can't unmute his mic. Try unmuting your mic again, Will. Go on, talk.
Yeah, can you hear me?
Yeah, we can hear you again now. I don't know why it keeps cutting out.
Basically, REITs are good. Perhaps I'll post about a Goldilocks market in the Discord a bit more and talk about it. But there's like a few factors which, when it's been a Goldilocks market, REITs has performed the best out of all stock types. It's a bit boring. I don't love it, but it might be like a 6 month, 12-month play for I don't know, 10, 15, 20% perhaps.
For someone who doesn't know, Will, what's a REIT? Obviously, we know it.
What is it again? I can't remember. It's a real estate investment trust.
Yeah.
Yeah.
It's basically it's a built up of lots of things into one in it. So like I know obviously I used to invest in O, which is obviously a REIT. That's one of
Yeah,
the best
it's-
dividend paying REITs. Like
It's monthly,
They
isn't it?
basically buy houses and they buy buildings, and effectively it's like a massive conglomerate of getting like the rent money, effectively in like a really simple way.
And aren't
So
they mandated to pay out a certain amount of the profits as well, which is why it's a very strong
90%, mate,
dividend.
yeah.
Yeah, I thought so.
Yeah, so they can only keep 10% for themselves, so that's why there's a good yield on them, because they have to pay out like roughly 90%. So
yeah, someone just said VICINO. So I know everyone knows like oh really, it's one of the best dividend paying stocks. If you're a dividend investor, you normally have O in your portfolio. So it is a massive one. I'm not sure how it's been performing this year. So last thing we'll touch on then before we start doing some of these giveaways and then touch on some other stuff. What's everybody's lesson, like the most valuable lesson I've learned from 2025? I would say that everything's unpredicted, and as long as you've got, I'd say learning convictions, the biggest thing I learned this year. As long as you know exactly what you're invested in, because the markets are volatile as anything. This year we've seen it: tweets, Twitter beefs, tariff wars, government shutdowns, and I haven't really panic sold any of my stocks. So, and that's simply because I know what I hold and I know what I invest in. So I'd say conviction this year is something, conviction and emotions is something I've learned to master this year. So that was definitely my 2025 takeaway.
I think for me, probably quite similar, and maybe it's also similar to what Ben you mentioned earlier about how reactionary the market is. And I think investing over a few years, it feels more reactionary now than it has been previously. It's not even concrete news that comes out. There can be little rumors and unconfirmed rumors, and things move massively. And not only do they move really quickly, but they move more than I feel like they've been used to before. So it's really fact checking what comes out and seeing how you feel with it and having your own opinion, and not just following the herd of a rumor comes out, people panic sell and feel pressure to do the same. Having your own drive and your own conviction in something. I think through that, capitalizing on rare opportunities, something like the April dip doesn't come around very often, to have such a big dip timed perfectly with us UK investors for a nicer reset for those lucky enough to max out and then have cash waiting was a massive opportunity and one to grasp, and doesn't always come around. So taking advantage of those rare opportunities that come around. And then I guess there's a combination of both of those two things, just riding the waves of the market. It's not going to be a 45-degree line upwards. It's going to be a zigzag in any good worlds, and just making the most of it, recognizing when it's an opportunity, recognizing when it's just a little bubble. You don't always need to do something. Sometimes the best action is not doing anything, and not every drop needs to be bought up. Sometimes you can save it for a bit of a bigger drop.
Yeah, the thing that's the big one for me is like the emotion, like cutting out and just controlling your emotions, like someone said in the chat, is because it's so hard to. I think the big thing for people that do get into the stock market is, especially if you are going to go into individual stocks, is people get way too emotional. People get so attached to the share price that it's you sometimes almost get scared, and then you will sell out. And it's like, for instance, the Google situation. Like, no one wanted to buy. Well, obviously people were buying it, but a lot of people were putting it down and saying, "Oh, like Google's going downhill and all this," and it's just like, so then the share price just goes down lows. It just gets really emotional, and everyone just doesn't want to be in it. But it's just trying to like ignore that and then see you've done your research, so just ignore the noise, and then eventually it should play out to how you think it's going to be, how it's going to go. But it's just, yeah, it's ignoring a lot of people saying just to sell. Don't pay attention to some people saying it, because you will eventually say to yourself, oh, actually I am going to sell because everyone else wants to sell because it's not good or whatever. And it's just, if you've done your own research into something, then you should be fine. But I know a lot of people probably don't maybe even do the research into the stock. So then when it does go to a certain price, they're like, why is this? And sometimes it's just because, I don't know, no one wants to be into the stock at the moment, or there's a lot of bad news about it at the moment. But eventually, in the short term, yeah, it could be rough. But then if you're in it at the end of the day as well, we're not traders. Well, some people are traders, but I'm an investor. All of you are investors. So looking at it in a year is a very short time frame. Like, a lot of the stocks that I buy are minimum 5-year holds. So yeah, there's going to be a lot of ups and downs, but it's trying not to like get too emotional to the stocks. But yeah, and that's the thing I've learned over the years, to be fair. And even still, like, obviously when things do go down, you sometimes probably naturally go a bit like, am I doing the right decision? But you just got to stay true to what and the reasons why you bought into it.
Yeah, agreed. Are you there, Will? Are you with us?
Yeah.
There he is. Go on, mate. So what's your thoughts on it?
Yeah, well, when you obviously kind of gave a couple of questions before, I saw this one, I sort of almost chuckled a bit because, well, I've learned everything this year. Everything I know about investing, I've learned in the last like 10, 11 months. So I was like really sort of trying to think of, well, what's like the top 1 or 2 things. Obviously, you don't want to hear my whole year story about it. But I think I can really relate to a couple of things that like Jordan and Ben said. To be fair, that's definitely something I've thought about a lot. Research leads to conviction, which leads to being able to stomach the up and downs. I think that is like my headline of what I've learned. Research, it leads to conviction, which means you can then stomach the volatility and the up and downs. I think it really benefits me of doing that, of conviction, and they will understand that when the stock market dips and it rises, it's a feature, not a bug. It's designed to do that. It's not a money market fund. It doesn't go up in a 45-degree angle. I can see a lot of the comments are talking about emotions and like psychology, and that's massively important. That is a big thing, and I think I don't know whether you guys ever spoken to someone in your personal life about investing, and you kind of get a feel for someone in the first 2, 3, 4, 5 minutes. Like, do they get it or do they not? And are they going to be able to get it or not? And when I'm sort of thinking about those things, it's never related to what they know about investing, because obviously, if they're a beginner, it's, do they have the stomach for it, or are they going to be able to have the stomach for it? Because it's so important. But there's a massive but. If you don't have the stomach for most of it, but still a little bit, index funds are still your friend. They're your best friend, because it's still a fantastic thing to do. It's still far better than doing nothing. It's still going to beat inflation long term massively. And it's the number one top thing we can all do to beat inflation and to grow our wealth. So that's what I've learned this year as well. Obviously, you know that that I love my index funds as well. And yeah, I mean, I've learned so much. It's kind of almost hard to kind of answer the question, but inflation is the devil, as I love to say. The power of compounding is amazing, and everyone should invest.
Don't you find it interesting how Martin Lewis has now come up and had his own TV show and now promoting and saying about investing? And he showed the graph of how obviously even his best advice with all the savings accounts you could have over the last 10 years, and you would have like lost out to inflation. So, and he's like that. It's just interesting how a lot of people are now going to be coming into investing more so.
The problem,
I don't know
I
if
seen a
anyone's
problem.
seen it.
I seen a win with that and a problem with that Martin Lewis thing. It's normally when everybody's talking about something, it's normally a bad sign.
Yeah.
So
Especially in the
it's not-
crypto days when everyone talk about
yeah,
crypto.
it's-
I'm like,
normally,
oh,
if they're trying to get everybody into something, I was having a conversation with this about my missus. To be fair, normally if they're trying to pull everybody in and everybody's doing it, normally when bad stuff happens. But yeah, no, I agree with that. John, what's your most valuable thing you think you've learned from this year?
I think it's stick to your plan, have a solid plan, and I think if I'm honest, it took me about 6 months of this year to have a solid plan, because I jumped back into investing this year. And if you go back and watch any of my videos, you'll see every month I was going in a different direction with what I was investing and the way my portfolio was looking. And I think really from July onwards, I think I've had a solid plan. And then this one's next along the line with what everyone else has said: remain emotionless when investing. I think it is one of the key things. You've got to disassociate yourself when that stock drops, especially if you're in a high risk stock. And this is going to sound a bit sadistic. On the flip side, take advantage of those who are emotionless during investing and a sell-off comes. And then my last one is just embrace everything that happens. I'm a firm believer in everything happens for a reason. Just embrace it. That's how I stay relaxed. It is what it is. Move on.
It's funny how you say that, John, because I've got a note here that's stuck to my computer. And obviously, it's the classic one: buy when there's blood in the streets, even when it's your own. I keep that everywhere. So when there is down days, I just remember that and just carry on buying. Before we touch on something else, Alessio's asked a question here. What's all of your opinions on shifting from safer investments into individual companies if it ticks all your boxes? Now, I mean, most of us are individual investors anyway, so I think this one more relies on you, Will, more than us. If you want to answer that one.
Sure, yeah. I know this is probably like more like a general question. So I think it really depends on someone's risk tolerance. It really depends on their size of their portfolio, I think, as well. I think it depends on their time horizon, on their age, because I remember Jordan saying this. It was like 5-6 months ago. But when someone's young and when someone's old, they justify the same thing for the opposite reason. So there's people who are 18, 19, 20 and say, well, I've got so many years, I can take a lot of risk. Basically meaning if I blow up my account, it's fine because I can make more money. And then there's the people who are 45, 50, 55, 60 who say, well, I'm a bit behind. I got to take risks because I'm behind, right? So I know this is a bit of like a wishy-washy answer, but I guess like there are too many factors really. But if it truly ticked all of my boxes and it seemed like a perfect stock for me, I would probably just put in new capital into it as opposed to taking out from my kind of core ETF positions. I sort of try to see them as like a untouchable, locked off kind of pie, if you like, right? And then if something new came up, then yeah, I mean, I'd definitely be all over it if it took all the boxes. But I think there's so many factors into that kind of question. But in principle, yeah, I think it's definitely being open to something different if it's going to work for me, for sure.
One here for you, Ben. I know you've just replied to it a little bit in there, but do you hold stocks for 5+ years, Ben? And what do you do when a stock you hold starts performing badly and isn't growing like Neo? Do you sell? What do you look at before selling a losing stock?
Yeah, so when I said like 5 years, obviously that's kind of like a generalized of saying like most of the time I would be holding for 5 years plus. Obviously things happen, like as you can see here, like if a company just starts performing badly, this, let's say, losing customers every single quarter and there's just no direction or no explanation of why that's happening, or no sign of turnaround, then yeah, you've got to go and look, is there any point really holding this stock because there's just a lot of negativity in the earnings? Then that's when I would probably cut my losses and sell and move on to something else, because there'll be a better opportunity out there. But when I say about like 5 years, it's almost like then it cuts out a lot of the sense of like the short-term noise of, i.e. like, for instance, you could be in a stock market crash like 2022. That was a whole year of just going down all the time. So it cuts out years of that. And then also when you have situations where people just don't want to touch the stock, like I know Google had like a little blimp, like it was only like a month or two, but it can sometimes happen for a year or two with a stock. Like, to be honest, PayPal is actually having a horrible time with the stock price, but realistically, it's a very cheap stock, and I'm sure in a few years' time it will reflect. And the quote I put in the chat, because I just think I think it's a really good quote from Peter Lynch, and it's like, it's so true. But like, over the long term, stock prices follow the direction of earnings. The company's profits rise consistently, its share price eventually reflects that reality. And that's what people got to remember, is you're not following the stock price as such, you're following their earnings and what they are actually producing on the bottom line. And if they're growing every single time, because SoFi had a point at this point where their earnings were doing really well, but the share price wasn't moving, but the financials were looking good. And then eventually the stock price will follow it. So yeah, you just got to just pay attention to the earnings. But yeah, no, for example, Neo is a great one, because I got into Neo in 2021, 2020 when I first started, and I just didn't understand valuation. So I got into Neo because everyone was talking about it, and I lost quite a bit of money. I think I can't remember how much, but I was probably buying. I'd love to actually know this. I'd love to actually search this up, but I was like buying at the top. Oh my God, I'm losing my voice. I had a heavy night out last night, so yeah, I was buying pretty much the top. And if you look at the share price now from 2021 to all the way it is now, if I carried on holding that stock, I would have been down loads more. But I sold it because when I started getting into actually understanding how you can value a company, I was thinking, what am I doing holding this? Like, the earnings are not great. The valuation is insane for the earnings they're even producing. So I was like, this is just such a dead stock. Like, it's not going to make me any money. So I sold it. And luckily I did sell it, because I would have been down a lot more if I kept holding it from now. Yeah.
So Dan says, Jay, does that ticker symbol stress you out having it all the time? No, it don't, mate, because I only invest in winners. Another thing that someone said here, it says, why do you guys invest in individual stocks when the facts show that ETFs are better out of interest? Like I did see Will reply, saying better is probably the wrong word. Safer is definitely. So on average, you get 11% a year, 10% a year on the S&P 500 on average over the last 100 years, I think it is. But some of our portfolios this year, I don't know who's okay with sharing. If you're not, you can just go over. I think I'm up through just under 300% this year, so that's more than the S&P. George, are you okay sharing your percent, or
120, I think.
Ben, what's yours?
The year?
Yeah. What's yours, John?
Mine's 11.4.
And what's yours, Will? If you don't mind sharing yours as well, I'm not sure who wants to or not.
I actually don't know, to be fair.
That's when you know you got too much money.
Yeah.
What's yours, Ben, for the year?
85%.
That's what I mean. So when we're talking, Jesus, man, Ondas has done me a blinder this year. So that's what I mean. When you say better, I guess they are better in regards to more safer long-term investing. But in years like this year, and there is other years where it's happened, I guess individual stocks do pay dividends in that aspect as well.
I think it's a good question, though, because
Will just dipped out on us again.
We'll never know what the good question was.
It's a good question, was it? Here's another quick one, lads. Then we're going to do the giveaway. So when evaluating a stock, do you also, someone's asked this before, but there's more of you on here now, so I'm going to ask it again. Do you also consider the company's moral standards and whether it engages in unethical practices? To be honest, I've not invested or had any that's in unethical practices in my so I can't really answer on that. But what about you, boys?
Probably a lot of, in some ways, unfortunately, probably a lot of stocks that we hold are probably in some ways unethical, or do things that.
Look at it, isn't it? Because Palantir, people screamed about Palantir. I guess I'm in Ondas, so, but that's more. I mean, it's more surveillance drones, the type of stuff, than it is counter UAS more than it is attack drones. So, yeah, what's everyone's opinions on that?
I couldn't give a crap, if I'm honest.
John
I'm in the stock market to make money. I'm not. That's all I'm in the stock market for.
What about you, Jordan?
As a blanket approach, no. If it was like a standout case where it was affecting sentiment, then it'd be something to look into and consider how much it might be affecting things, but not as like every stock I'm in going through that, just as and when it feels necessary.
No, that's fair enough. Here's another good one as well, and then we're going to do that. There's people just putting in good questions now. How many positions is the optimum amount in your opinion? How do you think about position sizing for each? So for me, I have 2 ETFs and I have 5 individual stocks. I think that's more than enough. I spend a lot of time on the market, but again, it depends how much time you've got. A stock like Ondas needs constant attention because there's news coming out every day or every other day. So whereas other stocks like PayPal, it's not really releasing that much news, so it's easier to manage stocks like that. So I guess it depends on how active your stock is, whether it's a small cap, a large cap, what's really going on. But yeah, what's your opinion on that, Jordan? And go across.
I think the answer is a question which is just how many can you keep up to date with, how many can you keep track of, and how many can you keep informed with of just news and any changes in the fundamentals. And whatever the answer is to that, I think is your answer. I think everyone's different. Some people love it and can't wait to do research and look through stuff, and they can give hours every day. Some people don't like it, or they're just really busy and they can't do as many. So I think it just changes per person. For me, 6, 7, ideally. If anyone
I see what you did there. See what you did there.
I was laughing up and I said it. 7.
What about you, Ben? Where does it stop for you?
Yeah, obviously it depends on the individual. Like some people just have an insane risk tolerance. So some people will go and literally do their full portfolio actually Brad, to be fair, didn't he, with Ondas. So it's everyone's got their own risk tolerance, but I've said it before as well, like Jordan said, is if you are doing individual stocks, I just don't understand or how people can have 15, 20 individual stocks, because it's just quite hard to keep up unless you're doing it full time. Then yeah, but if you've got a full-time job, have balancing and trying to research and constantly keep, because it's not just researching the company, and once you've researched that company, you've got to still research that company because things change all the time. Every single day there could be some news, so you've got to keep up to date with it. So having 15, 20 individual stocks is hard. You might as well just get into an ETF at that point, to be honest. But I like to have about 6, 8 different stocks. So yeah.
Are you back with us, Will?
Yeah. Well.
Yeah, there we go. So. What's your view on that, mate?
I think Jordan nailed it. I think. Well, I used to say sort of 4, 5, 6 stocks is perfect, but I think Jordan's right. If you got more time, then you can have more. But I think it's all about time. Like if someone was going to truly properly be a stock picker, in my opinion, 15, 20 hours straight off the bat research, then ticking over every month, probably 4 to 12 a month. So if you've got the 20 hours.
It's so weird that it
works for ages, then just fucks up.
Yeah.
Go on then, John. You do what you
mine's very similar. So I hold 6 individual stocks and then 3 ETFs, and it's really all you can keep up with. But I also think it depends on your strategy. If you're doing dividend investing, a lot of dividend investors have a lot more stocks. But also if you're the sort of person who's going to see an opportunity, say Palantir drops, and you think that company in the next 20 years is going to be one of those that no one can go without, you could load up that one time and then just hold it in your portfolio for 20 years. So it depends how active you are going to keep up with that, or if you're literally just happy to load up once and let it run.
Yeah, no, I think that's what I mean. I think it more comes down to, like you say, that mansion is serious. We're all having a tough time. I think, like you say, it comes down to a time thing more than anything. So let's do this, because otherwise we're going to keep jumping on questions, because there's a few more there. So we're going to do it. So obviously this is everybody's name out of the server from their WAP username, so we might have to cross them over. That was the easiest way to export it. So as you can see on this, I'm going to flip to my other screen real quick. There's 486 entries on here. That's how many members we've got in the Discord server, which I think is crazy. That this is it's grown that much this year, considering it's paid. So obviously we're going to do six £50 giveaways, and then obviously I'll reach out. The people can reach out to me in the server. So let's do the first one. Let me shuffle all these names up because they're off there. So the first one. Oh, I was dreading that was going to be really loud. It'll keep the results on there as well, so it's all good. When it lands on one of us, we'll be in there. Jack Morgan. So obviously I'll have all the names and the results anyway. Thing is, when I did these on YouTube, people used to make the YouTube account with a dot on the end to try and reach out to me to steal somebody else's prize money, man. It was crazy.
No way.
Yeah, people go a long way to, Will's back. Chuck him back in. There we go. So, yeah, that's the first one. So let's do, so well done, Jack. I'm going to remove you out of there so it's done. You'll be on the results page though, so it's all right. Everybody will get saved here and I'll work off that. So the second person winning 50 quid in the Discord server. And if you aren't a part of the Discord server, it is in the description. So you can go get involved in that. So the second person, Mr. B. Is that you, John?
I don't know. You'll have to tell us. I've got Teddy here, so.
Number 3, obviously the what names you see, so it's whatever they had their what usernames as. The third person is James. That uploads, doesn't it? Fourth person.
Might be a few James watching now, wondering if they're the James that won.
Yeah. We'll pull the Discord names up after. Not even going to attempt to try and say that. Going to make a fool out of myself.
Just Matthias.
So that's that one. So what, we've got 2 more. So number 5. Do you like my little symbol in the middle of it? Pick up derps.
Hey.
He ain't having that. We're going to spend that. Spending that on sweets. And the last person is Max. He speaks a lot in the chat as well. He's one of my YouTube subscribers. He is fair play. He's won before. Go on. So there we go. That's the 6 people that have won. So Jack, Mr. B, James, Derpy, Max. So congratulations to everyone. And like I say, we appreciate you being a part of the server. So it's nice to give some money back to people that are in the server. So thank you. So back to a couple of these questions. Probably do about another 15 minutes and we'll jump off because I know some of us got work early. Alessio said, opinions on crypto. And do you think crypto is / can be good for new investors? Me personally, I think if you're a new investor, I think no. And I think these ETFs for crypto, it isn't buying crypto. You get an exposure to crypto. It's a difference. I think if you wanted to be involved in crypto, I don't think ETFs is the way to be buying it. I think it's better to be holding your assets in your own wallets. But that's my own view on it. What's your view on that, Jordan? And we'll go across the way.
Crypto, not for me. I'm not a big... for me, anything that has hype, I don't like too much. I know you can make money off of hype, but I usually try to avoid it as best I can just because it's unpredictable and it can all of a sudden fall off a cliff. And for me, not entirely, but a lot of crypto ties into that hype side. And aside from that, I just haven't looked too much into crypto myself. But for new investor, I think it just depends. If you're a new investor and you are picking up stuff, you're given time and you're actually trying to learn, then you can start on any topic if you do it the right way. But for someone who doesn't have that time, you're better off sticking with funds and even individual stocks before crypto, in my opinion.
What's your view, Ben?
I've got crypto, but it's a small part of the portfolio. It is very volatile for sure. So if you're a new investor, I wouldn't bother because you just get sucked into the hype for sure. And people will just tell you to buy this coin and then you'll just lose so much money. I mean, I've lost a lot of money in crypto. But to be honest, one that I actually do want to be buying more and actually have a bit of exposure to is Bitcoin, to be honest. Like I would like to have a bit of a more of a position in Bitcoin. So yeah, but yeah, crypto is just very volatile and it is just risky, and there's nothing really to base it off apart from like you say, hype. So yeah.
Are you there, Will?
I hope so.
He's going to give us half an explanation and dip again.
I hope so. I'm not here.
But yeah, what's your views on crypto, mate?
Can you hear me?
Yeah, we can hear.
Cool. I like crypto, but I think I've told this story before, but I had some work done to my house, and 3 out of the 4 builders who were here, individually, 3 of them mentioned a crypto to me, and it kind of summed it up. Like, they're talking about gambling, crypto, hype stocks, always checking their phone to see, when to sell, like a pump and dump type thing. So it's a bit of like a nuanced answer. Like, if you're talking crypto as part of like a balanced portfolio, what?
Oh no.
You got
There's
the
Max
timer.
like
He needs to get his
like
internet sorted. He does need SpaceX.
I'm sending Will a new mic in the post. John, what's your view?
I don't touch it. I wouldn't mind looking into it a bit more to see. I think exposure is right. But anyone I've ever known who's been involved in crypto has lost money. So maybe they don't know what they're doing, or they're just getting unlucky with the picks. But I don't know. I think it's a hard one to wrap your head around as a new investor. Because even I look into stuff now, and I wouldn't say I was a brand new investor, but I definitely know my basics, and I can't wrap my head around crypto when I have had a look. But yeah, that's it.
Yeah, no, like I say, I mean, I'm in Hive, which obviously is a Bitcoin miner, but I'm not looking at it from that type of. I'm looking from the transition that they're going to be going into, what they're doing next. The Will, I'm annoyed. He's having a mare, isn't he? But in regards to buying like crypto, I mean, I hold XRP, I hold a few different bits of crypto that I've owned for a long time. But I don't. If I was a new investor, I did that when I started learning about it, but I don't really know that much about as much as what other people probably do. So yeah, I only keep my exposures to that very small. Is there anything else that anyone else wanted to touch on? I'm not sure if there was anything else. Has anyone got anything else they want to touch on? George, John, Ben, anything you want to?
Do you think we're going to have a bit of a Santa rally to the end?
I think this week depends on GDP results because we've got the estimated results on Tuesday, isn't it? I think it is. I think stuff like that's going to pay a benefactor into it. But I would think personally, going into the Christmas as we break up, more people would sell to hold more cash. So maybe I'm wrong. What do you think?
I think we're still seeing good spending, aren't we? In the consumer market still looks quite strong, even though the buy now, pay later stuff was up. So if that trend continued, maybe that's a little bit of a concern. But the consumer market still looks good, so at least on that side of things, maybe still a Santa rally, maybe a bit of a muted one for what we've been used to because it already had such a good run anyway.
What do you think, Ben?
I have no idea, to be honest. I think we're going to just be trading sideways, to be honest. My portfolio has kind of been. I mean, obviously, I've had we've all had an insane run, but my portfolio since I would say October, it's kind of been sideways, like just the big swings, like up, and then all the way back down, and then up again. It's just been, the swings have been huge, but they've just it's just been flat, my portfolio. So I just think we're going to keep going through this range at the moment, but until the next earnings, which is obviously, is it February time?
Yes, I believe so. When the next
or just
one's
late
made.
Jan or something like that.
Yeah. So what do you think, John? Do you reckon we'll have a Santa rally, or?
I feel like we might already be at the top side of it for my portfolio anyway. I think it's done well the whole of December, so I'll be surprised if we see it run anymore. And then really going into the next year, I'm not expecting much from the first 3 months, if I'm honest. I'm thinking there might be a bit of a plateau, but obviously see how it plays out.
I was going to say as well, don't you find it interesting how some of like the Mag 7 Google obviously had, let me just double check this. Google had an insane year. Yeah, up 50, I think it was up like 57% on the year, it's saying. Meta is up 9% on the year. Like some of them have just had like crazy runs, but like Meta at one point was obviously down in the dumps not so long ago. Kind of what happened to Google, but like it seems to be catching a bit of a bid now, Meta. But there was a point where like, yeah, Meta was like literally flat on the year, hasn't really gained. And also I think, yeah, Amazon's flat on the year. It's only up 1%. So Amazon is that one looks a good price. And then Nvidia, I think, had a good year, obviously. But yeah, like Google and Nvidia are the ones that have standed out, have had like insane years for the Mag 7, but Meta and Amazon haven't really. So it'd be interesting to see if they have big runs next year.
What do you think, Will? Do you think we're going to have a Santa Rally, or what do you think?
Maybe a little bit. I don't think we'll have the 2.5% to get to 7,000 S&P. I think it's too much to do in the last 5-6 days. Maybe 1% over the next 10 days. So I guess a bit of a rally, yeah.
So just the last one then, lads, and we'll call it on this one to do it, the last one. What's your predictions for 2026? Do you think crash, flat, 10%, 20%? But like I say, for me to get to where I need to get, I'm going to need 24% growth with my deposit in, I think. So I personally think 26 is going to be a good year. I think it'll be just as rocky as 25, but I think it's going to be a good year. What's your boys' view on it?
I still think it'll be a green year. I don't think it's like a market wide, it will be as green as 25, maybe. I think we may not see the same range in terms of the same scope of how low the lows were and how high the peaks were. I think it'll be a little bit more muted, a little bit more trading flat, as Ben said. I think we'll still be up. I would hope for, I'd be happy with anything above 10% as always. I'd hope for 20, 25.
What about you, Ben? Where do you think we're going to be this year?
What, for 2026?
Yeah, you're going into the year.
What I think's interesting is the Russell 2000, which obviously tracks a lot of the small caps, had a good year, up 13% on the year. And then I think as well, yeah, for a long time, the Russell 2000 from 2021, which was obviously that crazy year for small caps, like the valuations were mental. It was literally, if you were buying from the top in 2021, then you would have been down since like beginning of like 2024. No, you would have coming into 2025 actually. So it was down for ages, the Russell 2000, and then it's had this run that it's had. So I think I think I just think we're going to have a bit of a slower year next year. I don't think we're going to have like a crash or anything, but I just think it'll just be a very steady, slow year just so stocks can just catch up with valuations a bit more. And yeah, that's what I think. Because I think as well, there's a graph with the S&P 500, and it's showing that the PEG ratio's sitting at 1.2, which isn't too bad. Because in the past, like 2021, it was 2.4, which was really high. So yeah,
I seen you mention that in your update video. I seen you talking about it. Yeah. What do you think, Will? What do you think for next year? What's your predictions?
Well, I don't want to give a long answer and then get cut out, so I'll just go short and sweet. I think there's a lot of catalysts for a good year. Obviously, like the Fed rate should probably be coming down again in May, June with the new Fed chair. I think there's a general big enough wall of worry that slowly more and more money is going to trickle into the market, and people are going to pull money out of money market funds and put money and put money into the market. I think there's going to be a big drawdown, but there generally is anyway. I think it's going to be a rocky year. I think it's going to be a stock picking year. I don't think it's going to be a big, broad market rally per se. But I think solid, good picks will do really well. S&P, I would.
That was your enough. That was your time
There
there.
we go,
Will.
the guys.
Yeah, that was it. The computer said that's long enough. Thanks, man.
It's word limit.
George, what about you? John, sorry, what about you, mate?
I think we'll have a bit of a mid-year. I don't think we'll see 20%. I think we'll be sitting between 10 and 20. And like I said, I think we'll be a bit flat in the first 3 months of the year as well. I think obviously inflation's going down, or interest rates are going down. But I still think there's quite a few macroeconomic pressures that I would like to see cool off before I think the market could run like it has in the past few years. So I think it'll be a bit of a mid-year.
No, that's good, man. Like I say, we've been on for about an hour and 10 now, so hopefully everybody 16% was my last words. Like I say, it's been a 16% SPX target. So yeah, it's been a good evening. Like I say, everyone, if you have enjoyed it, don't forget to like it. Obviously, the QR code is in the top right corner as well if you want to donate to the charity. Obviously, it's going to a good cause. Only a couple days left. But yeah, we appreciate you all coming. So thank you very much for joining us.
Yeah, no, this has been good.